Every trader wants to catch that breakout, the moment a stock finally bursts past resistance and races higher. But here's the hard truth. By the time most people notice, the move's already happened. That's why traders using data, not luck, consistently get in earlier. So how do they do it? They focus on stocks that just broke through a resistance level, that invisible price ceiling where sellers used to dominate. Once a stock pushes through that wall, it often sprints higher until it finds the next barrier. That's what Levelfield's AI tracks with its Quick Sprint scenario. Quick Sprint spots the companies suddenly getting attention from investors, often after major news, upgrades, or market buzz. For short-term traders, these alerts are gold. Most of the time, the best returns happen within 1 to 10 trading days. And here's the key. When you're up 10% in 5 days, take the win. Don't wait for the perfect exit that never comes. For long-term investors, Quick Sprints can be a discovery tool too. If you find a breakout stock with solid financials and a strong sector, it might be worth holding through the volatility. Here's a real example. On November 6, 2024, GEO Group broke out of a trading pattern and gained 42% in a single day. The trigger? A price target upgrade from Wedbush from $17 to $20 per share. That one analyst note brought in a flood of investor attention, sending the stock soaring from $15.13 to $21.50 by the close. Traders who caught that move didn't need to guess. They just needed the alert. One practical way to trade setups like this is by buying 100 shares and selling covered calls. You lock in profits as momentum builds, and if the stock keeps running, your calls can expire in the money, with gains on both sides. But here's where it gets even more powerful. At the bottom of every Quick Sprints scenario, Levelfield shows average price moves by day across thousands of stocks. Statistically, the best short-term window is around 3 days, where cumulative returns peak. And when you apply filters, it gets even sharper. For example, filtering by medium or high PE ratios boosts the average day one move from 1.9% to 4.35%. That's a major difference. And when you compound it across all qualifying events, the potential return can reach over 140% annually. The bottom line? Breakout trading works best when it's backed by data. Levelfield's AI doesn't just show you which stocks are moving, it shows why they're moving and what usually happens next. So whether you're riding a short-term surge or hunting for your next long-term winner, the Quick Sprints scenario gives you everything you need to spot high momentum plays before the breakout happens. Follow and subscribe for more. Levelfield's Elite Investing, Effortless AI.